Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 8th of February 2020 and we're publishing our gold and silver weekly update for the week ending the 7th of February. Now before we cover the update, just a brief reminder that yesterday we published a video entitled Favourable Jobs Report Strengthens US Dollar, which complements part of what we're discussing today. And so if you haven't had an opportunity to listen to it, we have placed a link in the description box below. Gold fell $19 last week from $1,589 to $1,570, reversing the previous week's gain, having hit a high of $1,592 and a low of $1,547. In sterling terms, gold finished the week at £1,218, that's up £15. And in euros it closed at €1,434, that's up €2. It's worth mentioning here that the pound weakened against the dollar last week from $1.32 last Friday's close to the current $1.29 this Friday's close, which is why we have seen gold prices rise in sterling compared with the dollar value of gold falling. Similarly, silver fell 34 cents from $18.03 to $17.69, having hit a high of $18.09 and a low of $17.48. In sterling terms, it closed at £13.72, that's up 7 pence, and in euros it closed at 16.16 euros, that's down 0.09 euros. The gold to silver ratio rose again this week, from 88.1 to 1 to 88.7 to 1. That 90 to 1 ratio we are predicting, it's coming preciously close. The Dow Jones closed on Friday at 29,102, down 277 points on the day, but up 846 points on the week, reversing and improving upon the previous week's fall. The Nasdaq closed at 9,520, down 51 points on the day, but up 370 points on the week. And the S&P 500 closed at 3,327, down 18 points on the day, but up 102 points on the week. Brent crude closed at $54.47, down $2.15. And WTI crude closed at $50.32. That's down $1.24 on the week. And I have to admit, we've actually started to notice the change in price at the petrol pumps here in the UK, which most Brits know. Fuel, as you call it in America, gas, is heavily taxed here. So it does take a while for oil prices to filter through to the pumps. The dollar index stands at 98.68. That's up 1.29 for the week. Now, we concluded last week's update with the following words, quote, "We are likely to have higher precious metal prices continue until, of course, greater clarification is received and to what level of containment is achieved, and this may take many more weeks to pass before that detail is known. Also, please bear in mind that silver prices, whilst benefiting from the monetary demand for the metal, it being linked to gold, may indeed suffer from the industrial demand, as global trade is adversely affected. And whilst we believe that the upward momentum will be greater than the downward momentum, we also believe at this stage that it won't be as strong as gold, and we could easily see the gold to silver ratio move back into the 90s again very soon." Well, initially gold did open up a little last week and then fell quite quickly, reaching its week's low on Wednesday at 1547, then gradually rising for the rest of the week, but failing to approach its opening highs. The coronavirus continued to affect prices, particularly though last week to the downside as opposed to the week before to the upside, as rumours of a cure were mooted. Strong economic and employment data acted as a catalyst to a strengthening dollar, But interestingly, gold also managed to rise as this news was announced, culminating in a pretty amazing jobs figure on Friday of some 225,000 new jobs being created against estimates of between 158,000 and 164,000. The euro helped the dollar strengthen yet again by falling to its lowest level since October, after German industrial output for December recorded its biggest decline in a decade. Sterling too also fell against the dollar, once again supporting our long-held belief and view, despite what the shifts of this world tell you, the US dollar is still the go-to currency when the world suffers economically, and will be for some time to come. Now on Friday, US equity markets declined, but this is against a backdrop of 4 successive day rises, and some nervousness was created when China delayed the release of trade data for January, thereby causing its own markets to falter and the natural knock-on effect. And these figures will now likely be included in February's figures, which will create even more uncertainty until they are announced. Naturally, this is suspicious and may be a subject we shall come back to in a later video. Now, from a technical analysis point of view, there is short-term support near the 20-day moving average of $1,564 and resistance at February's high of $1,592, with the next resistance level being January's high at $1,611. Now, though short-term momentum is positive, the other indicators suggest consolidation, and once again we suspect you shall see prices vacillate within our raised price range of $1,550 to $1,650. It was originally $1,500 to $1,600, but we're of the view it is more likely to be $1,550 to $1,650, with a downward outlier of $1,500. Now, as mentioned in our video yesterday, although the job figures were quite excellent, when delving into the type of jobs on offer, they are tending and trending to be lower paid ones, whereas the higher paid manufacturing jobs actually saw a loss of 12,000 jobs due to a fall in motor vehicles and parts to repair them. Silver, like gold, took a bit of a hammering after opening up for the first hour of trading and moved in a similar direction to gold thereafter, but towards lower levels, resulting in silver being down 1.9% on the week, compared with gold being down 1.2%. That is in dollar terms, remember. Most technical analysts agree with what we have quoted for some time, in that silver has pretty good support at $1,750 and very strong support at $17, which is where the 200-day EMA rests. Now on the upside, we have resistance at $18 and then strong resistance at $18.50 and very strong resistance at $19. And whilst many analysts are talking silver up to that level, its current industrial demand is preventing it from venturing into that territory. Again, from a technical perspective, there are a number of advocates who believe, based on their analysis, that a monthly bullish flag formation has developed. And although prices have broadly consolidated over the past 6 to 7 months, a breakout, they believe, is shortly on the cards and will be underway once $18.85 and then $19 is breached. Now, technically, we do not disagree with that. However, markets do not just behave the way technical analysis suggests. And again, we caution members when subscribing to technical analysis newsletters and advisors that this is just a tool and not a guarantee. Otherwise, those teaching the subject would just spend their time full-time trading and making millions rather than teaching. We use technical analysis ourselves, we admit that openly, but as a tool amongst many. Now, last week, we witnessed a considerable amount of economic data, most of which, but not all, was positive and better than expectations. So let's take a look at what's on the cards for this week. Well, on Monday, there's nothing scheduled. Tuesday, household debt for quarter 4, and Fed Chair Jerome Powell's testimony to Congress. On Wednesday, Jerome Powell continues with his testimony, and we have the federal budget for January. Thursday, Consumer Price Index for January and Core CPI for January. And as always, Friday, being the day when the bulk of information tends to be released, we have retail sales, import price index, industrial production, and capacity utilization all for January, and the consumer sentiment index for February. Now, whilst we shall be watching Powell's testimonies, we're not expecting any real surprises or change from his report after the last FOMC interest rate decision. The economic data published this past week, if anything, strengthens the case for not lowering interest rates for the next few months at least, which is why we suspect equity markets responded really so badly to the jobs data, whereas under normal circumstances, they would have risen. And we believe this, though, to be a real possibility next week, that is, rising equity markets. Clearly, traders wanted to enter the weekend, having taken quite healthy profits for the week. Now, the key data next week will be Thursday and Friday, and we are expecting figures once again to support what some regard as the underlying strength of the economy. Of course, others take a differing view, though we're not so convinced about industrial production. And we are actually expecting those figures to disappoint. Now, predicting gold and silver's price movements will be a little more difficult than usual for next week because of what happened yesterday. We saw the stock market fall when really it should have risen, and the dollar index rise, and gold and silver prices also rose when they should have fallen. And the coronavirus information, which has been and will continue to be a large influence, has moved from cure found to cure being available in 12 months. And of course, both the death toll and the numbers infected are rising each day. Now, our best assessment is continued consolidation. And providing equity markets do pick up next week, we can see both gold and silver struggling to advance much further. Please bear in mind, though, at this stage, we are far more bullish gold than silver. And as we stated last week, we do expect the gold to silver ratio to eventually touch that 90-to-1 level again pretty soon. Rest assured, though, that any weakness in price does create an opportunity for those who wish to add to their holdings to do so for the longer term. Now, controversially, Greg and I will be providing a coronavirus update tomorrow. And for Inner Sanctum members, we shall also be publishing our gold 2020 price prediction tomorrow and our silver price prediction for 2020 on Monday. Now, to access that, you need to go to our website at illuminatisilver.com, sign in, and click the relevant premium video content box. Now, this video will then be released to everyone the following week. Now, we are making a number of changes to our channel in that, as already mentioned, Trump issues and discussion issues between Greg and I on non-financial and non-precious metal matters will be carried out on 2 new channels. And we've set up links to these in the description box below. Now, important precious metal issues will appear first in the Inner Sanctum for the benefit of bronze and silver members, and will then be released generally some 7 to 10 days later. Less important but time-sensitive videos will be released to everyone as they occur. We also have some good news, in that those silver members who've been with us for 12 months or more, your high relief 0.999 silver coin, Illuminati silver coin, will be dispatched to the address we hold for you in early March. And bronze members will be able to acquire these coins at a discount. However, only 100 will be available. And we shall be sending you an update, read this, by email. So please watch your email box over the next couple of days. Now, we admit and apologize that this coin should have really been sent sooner. perhaps the end of January in fairness, but we had 3 issues. 1. Agreeing the design and intricacy was difficult, as it changed literally more than a dozen times before the final design was approved. 2. The first manufacturer we went to let us down last minute. In fairness, because they were concerned that they may not be in business to finish the production, and all credit to them advised us accordingly. Now this actually worked in our favour, ironically, as it enabled us to change the design a 13th time, hopefully not unlucky for some, having had more time to analyse it and to take their recommendations on board. And 3, my fault, really. The recent family demises took my attention away a little from chasing this matter as hard as I should have done, which probably added a month to the delay, and for that I apologise. However, if you're entitled to that coin, you will still receive it. What I have done, however, is to ask the new manufacturer to make the coin to a higher standard of relief to compensate. And we are very confident that no one will be disappointed with the end result. Now, we mentioned earlier in the week, and last week in fact, that we shall be adding additional benefits for Inner Sanctum members, and we will be publishing those early next week. So again, please watch out for that video, which will either be released Tuesday or Wednesday, and also the emails we shall be sending you over the next few days. Thank you so much for listening, and if you haven't already done so, please subscribe to our channel and press the bell sign so that you are notified of our videos as and when they are published. And once again, please check below for the links we've already mentioned, and I shall place some of them also in the comment section. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.